Good morning, everyone. My name is Berit Voes. I'm the Director of FinTech Solutions at Riddle&Code, and I'm very happy to welcome everyone to today's event about digital assets, DeFi and NFTs, brought to you by Disrupt and Riddle&Code. We have a really packed session today, so we'll move on really quickly. But before we do that, I just wanted to mention that you can ask all your questions during the event in the chat window, and we'll try to answer as many as possible during the Q&A at the end of the event. So for the very first session today, we're really happy to have a familiar face to these sessions moderate our first fireside chat. So without much further ado, I would like to hand over to Philipp Sandner to kick off this event and to introduce the first speakers. Philipp, the floor is yours.
Yes, perfect. So let's directly get started into the topic. I would like to quickly present the speakers. I would rather ask to present everybody himself quickly. I would also deviate from the agenda a little bit, Alexander, and very quickly ask you about your opinion on Bitcoin. You know, did it change or did it not change? You know, the sentiment changed, but the facts did not change. But before we are doing this, maybe everybody please present yourself quickly and also your background.
Sure, and then I will start. Alex Koppel, I'm the CEO of Riddle&Code. My background is I've been working in telecommunications and media for some time in my past career. Before I met Tom, the founder of Riddle&Code, and I got excited by the opportunity to work with him and found Riddle&Code here in Austria. Now in the 4th year with Riddle&Code, and still excited about the opportunity we see in the market. Tom?
Okay, yes, so my name is Tom Fürstner. I'm the founder of Riddle&Code. Was founded 4 years ago. And the main reason we did it is because we are convinced that it's amazing what you can achieve with distributed ledgers and blockchains concerning digital assets. But our specialty and our niche is to achieve the same things for physical objects. And this bridge between blockchain and the physical world is something we are operating on a big scale, and the whole way the industry is moving forward these days, especially concerning NFTs, is proving that we are right. Yes, that's about Riddle&Code.
I perfectly agree. When I think about Riddle&Code, I typically think of Sebastian with his iron suitcase at a conference, and there are the chips inside where you basically can see custody tech in real life. Very often custody tech is simply described on PowerPoint slides, you know, like high secure stuff and so on. With Riddle&Code, you can basically touch and see custody tech in forms of the chips. Maybe you quickly describe in a second if this impression from me is right. You know, is this Riddle&Code, this little chip where you can like write a private key onto, or what I guess so, is Riddle&Code much more in terms of an ecosystem around the chip, software, and so on? So what is Riddle&Code? Is it a chip? Is it more? Is it the ecosystem? Please quickly for everybody describe this as providing a background.
Yes. So Riddle&Code is a platform and a stack. It's based around the idea. So you cannot hash physical objects naturally. You cannot do it. You would have to transmute them. But what you can do is you can bring the blockchain to the physical object by connecting them in a very secure way to so-called crypto accelerators, so small chips which are specialized and optimized for running all the cryptographic primitives. So at Riddle&Code, we do really everything. So from FPGAs design, basically ASIC design, yes, to driver design, to developing our own microcontroller boards, and it goes up to cloud services, so, and everything in between. So the full stack, starting more or less with logical units on an FPGA board, up to quite complex setups for multi-server cloud solutions, is more or less handled by Riddle&Code.
Perfect. And one follow-up question on this, also maybe Alexander, you're welcome to reply also here. Is Riddle&Code primarily about crypto exchanges, financial assets, real-world assets, industrial assets, cars, machines, and other things? You know, where do you see the vision here primarily? And plus, this is related to another question. People very often said, especially from the finance industry, that custody is a commodity margins will go down, and there is nothing to be earned in custody. This is what people said on their PowerPoint slides a couple of years ago. I think it's different because custody is like a key technology, because it allows access to all kinds of devices connected to them. But maybe Alexander, Tom, what's your perspective on this? Is custody, I repeat the question because it was too long, is custody just for the financial industry, or is there much more in it? I know the answer, but I want you to reply if this is okay.
I think, Philipp, you know, this question is really going deep into the philosophy of Riddle&Code. So I think, let me answer with something I learned from you know, my colleagues. Is like, you know, before you need custody, you need to have a digital asset, right? And the question to us is, you know, what's the next step, right? And you already gave the answer in the question. I think we see a lot happening in the industrial sector. Tokenization is taking shape, and it's changing the landscape pretty fast in many ways. You know, the way we engage with consumers, the way we produce, the way we finance. In all of this, it has a tremendous impact. And I think Tom and I have been thinking about this from the very beginning in the way we sort of set up Riddle&Code. So Riddle&Code is active along the value chain, which we see evolving, and it takes its roots in the creation of value, right? And without any disrespect to the financial industry, I'm not saying that, you know, assets coming out of the financial industry are not of value, the contrary. But I think that industrial production, and as Tom mentioned earlier, physical objects and machines are a source of value, which are perfectly to be combined with digital assets. And this is what we're focusing on. Now, to your question about custody, I think custody, to call custody a commodity is maybe a bit of an exaggeration, right? It's something when people say, I don't need custody, you know, it's going to be a commodity and, you know, everybody will have it. I tell you, Philipp, you know, we work basically in all of Europe, right? And we see a lot, we talk a lot to people. What we see in custody, with all respect, is far from being, you know, optimized, professionalized, and, you know, if you want, standardized, you know. But what we see happening is a lot of pressure coming from the regulatory bodies. You know, the more attractive the Bitcoins, as you earlier said, get, and the more successful, you know, exchanges get. And to be honest, it's a millennial phenomenon also around digital assets. And so, you know, there is a tendency from the regulatory structures to really look at the technology being used. Auditability is a big topic. You know, business rules are a big topic. So, long story short, I don't believe that this is a commodity yet. To become a commodity, there needs to be a standardized demand. You know, then you can create a commodity. The demand is being driven by, you know, unregulated local markets at the moment, and this is going to change. First. Second, I think custody will be a function of the product families we will be seeing. You know, and I already now, I think every day we talk to exchanges and investment companies and family offices, and it's very interesting, you know, what they believe tomorrow will be the demand for custody in terms of their product flexibility. So also this will be, you know, pose a challenge to some of the technologies which are being deployed at the moment. And we at Riddle&Code, we believe that we have a great and flexible technology which allows a very, I should say, open-minded approach to the digital assets to come in the near future, right? So flexibility towards demand is a big topic.
Okay. Okay, and where are we coming from? You know, in the past, we had trusted organizations such as banks, and they have been mandated by us to custody our assets. You know, you have the bank and their vault. I can put a gold coin in the vault, and the bank is watching it over years such that it's not getting stolen. The same is happening with securities and so on. And basically banks have been very good at caring about our stuff. You can always criticize banks for whatever they have been done in the financial crisis. We all know this, but still the core value of a bank is basically custodying assets. That's the vault, that's the bank account, that's the brokerage account, and so on. I think we can say this, right? But in the future, I would now expect that custody is basically moving away from banks, as you have said, Alexander, that custody is maybe becoming distributed. Custody might be spread out in the market, and you can easily see this, that basically we as human beings could do our own custody when we have a USB stick, and there might be a fraction of a Bitcoin on it, right? So custody is moved away from the bank and distributed in the economy. Custody could also be distributed towards products, you know, because a car in the future, a machine in the future, and other things, we will have tons of examples coming up, will do their own custody because a car needs to maintain a connection to its digital twin, right? Would you agree with this overall trend which is going on? Let's call it, I don't like this term of, you know, democratizing custody. You know, that's not so nice. But what I do like is that the outreach of custody, the distributing of custody, the dissemination of custody, going away from a few centralized, trustworthy organizations into all kinds of products, things, devices, USB sticks, people, smartphones, and so on. So this is, you could even call this a mega trend, right? Would you agree here, or am I exaggerating a little bit?
So at the end, let me answer. Alex. So let's say we have to make a difference between the capability and the possibility of things to happen and the reality, right? So the reality is we have a huge influx of new customers suddenly facing the challenges of dealing with crypto assets and crypto coins. And it's still quite complicated. So most of the coins are not held by the individual. They are still held by an exchange, maybe by a bank, if the bank is more innovative and already willing to go into crypto assets. But very, very seldom you see people who are really having their coins in self-custody. I mean, there are the so-called hardware wallets, which are more or less detached small devices, which are air-gapped against any kind of network to store your wealth, your crypto wealth or your crypto assets. And they have sold a tremendous amount of it over the last 3 years. So the two main companies, Trezor and Ledger, each of them sold between 4 to 16 million devices, which is really amazing. But at the end of the day, we see with all the companies we work with, custody is not an individual thing, it's still an institutional thing. And it changed last year a bit. But now with all the new products concerning, you know, DeFi, NFT, and so on, there are not even the tools for people to self-sovereign store their crypto assets. It's really complicated. So especially with DeFi. And if you want to stake or if you want to vote or you have multi-staking processes and so on, you could not do this simply with your mobile phone. Yeah? You can only use an interface offered by an exchange or a similar company. So what you say might be going to happen, yes, but at this point in time, no. I would say that custody is a quite centralized business and run by the big exchanges.
Okay, and do you see that this development will change in the future when we have the Internet of Things coming, when, for example, a car or a thing or a robot might be assigned to some kind of NFT token because then it has a digital twin? I think we all know these stories. Is this basically the vision for the next 5 to 10 years? Because, you know, what I just had in mind is the following. Think of the Internet of Things, which is slowly coming. The Internet of Things will consist of devices which probably are doing their custody themselves. I cannot imagine the Internet of Things where all the things are being connected to a couple of banks, and then the things are relying on the banks to do financial transactions. You know, sorry, but I cannot really imagine this. I think that all these devices, things, Industry 4.0 devices should and will do their own custody. Or another example, this might be a little bit off topic, you know, imagine the entire continent of Africa. You know, in Africa, you have partly regimes which are not working perfectly, right? You have not perfect institutions as the well-working institutions we have over here in Europe. So people in Africa, they cannot rely on trusted institutions sometimes. So they might be forced to do their own custody, right? With their own devices, with their own USB sticks, with their own cell phones and so on. So do you see a larger trend here coming? And Thomas, I think I perfectly agree with you. We have always to disentangle what has happened so far and what is currently happening and what will happen. But maybe you can provide us with a little bit of insights what you think will happen in +5 years from now on in the custody domain.
Okay, I mean, yes, it's a very valid question. So concerning the Industry 4.0 and concerning IoT and AI, IoT, edge computing, all this stuff is, you have to take it from a slightly different angle, right? So it's a trust issue. And we will be surrounded by intelligence networked connected devices within the next 10 years, up to billions of them. Yes, it's really incredible what's going to happen concerning this. And we have to trust the devices. So we have to trust that the device is built by a dedicated company, that it does or is running dedicated routines, that it has a certain ID, and that we can trust and rely on the data produced. So how can you address the problem? You address the problem by giving the devices identities. And these identities follow the so-called blockchain address scheme. So you have an identity, which is an address, a blockchain address. So when you have a blockchain address and data, and you exchange the data, what you have is settlement. So you have a wallet, right? So it's not far-fetched to say that in the future, every IoT device will be capable to settle data transactions and data value transactions automatically via blockchain technology. Therefore, you're spot on when you say, okay, the machines have to be sovereign so that machines can settle transactions with other machines or machines with industrial appliances and so on. Yeah, but still, the issue is what does it mean for the institutional trader or the institutional value holder is another matter. Yes, it's really undecided. Yeah, I was so convinced that self-custody would be a big issue already now, and it's simply not.
Interesting. Maybe, Alexander, would you like to add a point from your perspective?
Philipp, thanks. Yeah, you talked about trust in banks earlier, right? And I would like to add to this, and to the now, not so much to the future. I think the trust is also very much interconnected with regulation, right? The reason why we have trust in banks is because they're so regulated. And I think this is what we're also building on as Riddle&Code. We've always been working very intensively with regulators. And, you know, I'm really proud to say that since of last week, we are now fully regulated here in Austria and also as a crypto custodian, right? So we have achieved regulatory approval. We are at the moment undergoing an IT audit, which is also allowing us to then, you know, present basically to the market also a trust level, right? And I think, you know, this trust level is required if you want to become more than just and you talked earlier about the commodity custody, you know, if you want to become more than just a technical provider, right? We want to be a market maker. We know that there are a lot of steps we need to take to be able to be a trusted market maker. And I think that these, you know, I'm really optimistic that we will see a lot more of these market moves. And, you know, a lot what we see happening in Germany is making us very confident that these market moves, these market buildings in a trusted way will add to the overall acceptance of, you know, what we feel is going to be the next step, you know, the digital assets, which are rooted in industrial production, which are also then driving the demand for such services, whether this be custody or tokenization issuing or, you know, trusted sources of data.
Yeah, excellent. I think this is very interesting. I would like to make a follow-up question. 2 years ago, there were multiple companies in the area of custody starting their businesses. Some of them relied simply on the tech. Some of them simply relied on the regulatory side. That's basically then capable of talking to customers. Some of these ones acquiring a regulation are trying to build their own brand. Others are trying to do it in a white label approach, basically selling the tech plus regulation, but not their own brand, right? So you have the tech, you have the regulation, and you have the brand. And some people just are purchasing, just selling the tech, some just the regulatory side, or both together. And some are also selling their brand, so to say, even it's a small, tiny brand in comparison to State Street and so on. So you started as a custody tech provider, if I'm right, and now you're switching towards a regulated entity, like in addition to this as a service. Plus, you also, of course, have a significant brand out there. Of course, you know, you are not a brand like State Street and so on, but in the custody business, people do know you, of course. Is this interpretation right? Because you see multiple companies following different business models on these three dimensions. Did I interpret this correctly?
I think what you see
is right.
Sorry, Tom,
Alex. No, Alex, please go ahead.
No. Tom, look, you know, I think we talk about this.
Alexander, please.
Yes, so, you know, we are driven by necessities. So we are deeply rooted into the Swiss financial institutions, their environment. And when we started 4 years ago, so we are already regulated for more than 3 years by FINMA. Yes, before we got the FMA blessings in Austria, we got the FINMA blessing. And you know, it's quite interesting to see. So what happened there? So we started out serving, I think, 4 or 5 digital coins, yes, to a private bank. It was quite easy. And the problem was a simple one. They wanted to have something like multi-signature, and this was only working with Bitcoin, but not with the other coins. Yeah. So it was a technical challenge, and we had to tackle it and to solve it. So already 1 year into the project, suddenly we had to serve 35 different coins. Yeah, you know, nowadays you have to serve thousands of coins. It's a complete different thing, and suddenly you cannot only serve the coins; you have to serve logic. So you need something like business logic or policies and so on, and they cannot be written to the blockchain. So you have to deal with this kind of logic and business logic, and suddenly your business shifts. So you're not a classical custodian anymore, or a classical company delivering custodian solutions, technical solutions. You have to deal with business logic and with trading logic and so on, and then you move more and more into the regulated area. Then the things you tokenize or you turn into coins change. So you have to be very, very flexible, and you cannot clearly define what a custodian is today. It's really not possible, because the whole domain is developing with such an incredible speed. Yes, every day you have new institutions you have to deal with, and what suddenly happens is the regulators learned a lot over the last 4 years. Yes, so when I compare how we had to justify our endeavor 4 years ago with what we had to do during the last year to get the regulation settled with the FMA, it's incredible. So the regulators know what's going on now. And naturally they start to regulate. And then, you know, we have MiCA upcoming, so the European regulation or regulatory framework for everything concerning crypto and digital assets. And therefore, you have to be flexible, and you have to serve different purposes. So a technical one, a financial one, a logical one, and many, many more things. So this is what drives us. So you are right, up to the point that we are driven by the market and the regulator.
Yeah, and I would like to follow up on this question of regulation. Do you think the regulator is doing a good job, you know, by focusing in Germany on custody rules so far, or focusing on other things, for example, tokenization in Switzerland? Do you think the regulator is doing a good job? Is he making it potentially a little bit too hard? You know, people are criticizing the European Commission, including myself, that the MiCA is providing rules that are too tough, which would then potentially lead companies to go out of Europe. We never know if this is true right now. We will see in the future. But given that the role of regulation is important, do you think that the regulator is basically doing a good job? Is he maybe doing the rules a little bit too tough? Is it appropriate? Is it too fast? Is it too slow? What would you desire?
think, Philipp, to be frank, we're following the regulatory environments in Germany, Switzerland, Austria very closely, Luxembourg, of course, Liechtenstein. And I think we're not in a position to comment on the work of a regulator, honestly. I think there are so many variables these professionals need to take into consideration. I would like to answer the question in a different way.
Okay.
I can tell you how tough it is for us to live up to the standards which are required. To get a company to a professional level, which is required by the regulatory bodies, is actually not only very costly, but it really requires a lot of skill and competence, right? So your early analysis on the focus of some of the companies is absolutely right, because ultimately the market and the regulation sometimes only leaves with a limited amount of resource, a small space. Now we have decided to look at the entire value chain. And so back to your question, I think for us, it is a challenge every day. We keep an eye on the regulatory environment with not only fintech, but also with energy, also in the mobility sector. There's a lot going on, and we see this as a core competence of a company to be able to thrive in the future, to understand the different regulatory environments we live in, industry-wise, and also from a country perspective.
Okay, so in total, you would say that regulatory developments are key to your business. You have to monitor them, you are monitoring them, and this way you are always ready to have to adapt here and there according to the regulatory requirements.
Also to our clients, Philipp. I mean, our clients, they come to us and they are big industrial corporations, and they say, look, I want to do this. I've understood this is happening, so I want to get into this. But I, quite frankly, have no clue. So what we give them is, if you want, not only the technical value chain and the services, but also we give them advice. We work with them on the product side. This is why we have a strong operational products team also. And we work with them in shaping the regulatory framework for what they have in mind doing.
Okay, perfect. One of the last questions so far, we already talked a little bit about it, but maybe you can even deepen our understanding of the role of hardware in all this. You could purchase any random chip out there and somehow embed some kind of private key mechanism. You can do this, but you can also do it in a much more sophisticated way. So maybe why do you think that Riddle&Code has an excellent variant of the hardware approach, and how has this been developed over the last years?
Okay, so you cannot just simply take a chip from the market, right? So this would be great. First, the point is you need so-called hardened electronics. Yes, hardened electronics today is how can I say? We know approximately 75 standard attacks against the CPU. 75. Yeah. So, and when you have a crypto chip, more or less, you can also anticipate that these chips are protected against these 75 standard attacks. So these are things like, let's say, spoofing, side channel attacks, heating attacks, isotopic microscope attacks, and fault injection. I could go on and on and on. So you have to buy very dedicated chipsets. This is one thing. Second, the hardened means also that the software is quite sophisticated. So to program this takes really a lot of knowledge. Yeah. So it's a very dedicated domain knowledge. It comes from the last 20 years of smart card development, right? So, and there you have the first problem. You have to find people who have the knowledge. Yeah. Even if you sign NDAs, whatever is necessary, it's really, really, really complicated to find people with this dedicated knowledge about electronics and about cryptography. Yeah. So that's the second hurdle. The third hurdle is the moment you interconnect one secure component with other components, yes, you potentially compromise your own security. So you have to secure a whole system, which is really, really taking a lot of time. So it takes months. Then you have to go, once you have done it, you have to go through rigorous pen testing and physical attacks and so on. So the hardware became meanwhile quite sophisticated. The chips became quite sophisticated. And the only problem the industry is suffering from is the lack of people with the right domain knowledge on one side, and on the other side, still some NDAs on core components. But this is meanwhile also addressed. I don't know whether you've heard this. There's a company, it's called Tropical Square, mainly funded by the Tracer founders, yes, the Satoshi Lab guys, and they are building out the first secure crypto accelerator as an open hardware project, which is really quite exciting. Yeah? So to address exactly this, that we will have secure chips, which are still open source and open hardware, so they can be peer reviewed, everybody can check them and so on. So this is more or less the newest outcome, that even these complicated chips are now going to be open source. Yeah, which was not the case till now.
But as you said, you have proven very nicely, custody is not a commodity. It's much more complex, and it will grow into a very solid industry in the future, I would guess so.
Yes.
I would like to talk about machine wallets, because once the Internet of Things will grow, and we know the numbers, by 2025, there are expected to be 20 billion devices on the planet. That's 3 times more devices on Earth in comparison to people living here. So it will be huge, according to estimates, right? Where are we standing with regard to machine wallets? Has this been already picking up by the industry? What are companies doing, like, I don't know, Bosch, Siemens, Daimler, ThyssenKrupp, and so on? Are they working in this field already, or is it still in PowerPoint mode?
Alex?
No, Tom, look, please.
Okay, so I would say, sadly, no, we don't really know another company which is fully dedicated to build hardware wallets for machines. Yeah, so identity systems and digital twin systems, which are mainly built around the topics of identity. Yeah, this is done by Siemens, this is done by Bosch, this is done by Deutsche Telekom, and accordingly by other companies of this caliber. Yeah, but to embed a full-fledged hardware wallet, yes, which is really capable to settle any kind of coin transaction, we have not met another company really doing this right now. I think we are the only ones who have achieved this. So we did it for our famous car wallet, which we built for the German car industry. We are doing it for utility providers, so for energy production. And it works out, I would say, pretty well. Why? Because once the machine has an identity, the machine can settle its own data value transaction. You can also build completely new financial instruments. Yes, so green bonds. Yeah? So you have a full hardware wallet in a smart meter at the industry level, so where you produce the energy itself. Yes, then you can give proof that the energy is indeed green, that it was indeed produced by wind power or solar power. And then you even send it into a storage space or a battery, which is also approved by a hardware wallet. So you can be 100% assured if you consume this kind of energy, it's green one. You also know the output of this machine over a lifetime, so it's easy to turn it into a green bond. So you take some kind of investment, you put it into this, let's say, plant. You know the yearly outcome, so you can give an upside on the price on energy. And the arbitrage which is created is then driving the value of the bond. So this is more or less our true goal for our upcoming business models for the next 2 to 3 years.
Very nice.
Yes, I think this area is even hotter than many of the DeFi products right now.
So that's so let me wrap up very quickly, because I think we have to move on due to time restrictions. So first of all, I now perfectly also believe custody is not a commodity. Custody is moving out of the financial market into other areas. Custody is moving out of trusted organizations into the breadth, I would guess so. And custody can be, from a business perspective, being viewed from the perspective of the tech side, from the regulatory side, and from the business side. And depending on what companies are needing, you have multiple configuration here, and Riddle&Code is moving from the tech side also plus into the regulatory side. I'm very curious when one of your customers or one of you guys will implement one of your custody chips into the hand, for example, because this would then be the direct interface to a chain. I'm not saying that this would make sense actually, but it would be a very interesting experiment. Others are also thinking about, but this is maybe something to do so in the future. I think you want to do a last word, Alexander, to close this first part of the conference.
No, thanks very much. You know, it was a great. I think it was very interesting. You know, to touch upon the very many topics. And again, my hope is that we will see digital assets flourishing because then there's need for custody, and we see the source of digital assets coming from many directions. Regulatory being one of the, I think, positive drivers at the moment. And I'm also, because we're based in Vienna. We always look to Germany, and we always are thankful if especially industrial players start to really give this a big push, so we can in the context of global competition also work with the technology in a more scalable way.
Perfect. So excellent. We have to urgently hand back over to the organizers because we already are a couple of minutes late. Thanks much. It was very, very interesting.
Thanks, Philipp. Thank you very much.
Thank you. Bye-bye.
Thank you very much, Philipp, for the, as always, most interesting talk about digital assets custody. And now we're going to move on to the panel discussion. And I do have the pleasure to actually welcome the most beautiful speakers to talk about this this topic. This is on the one hand Uli Spankowski, CDO of Börse Stuttgart, Julian Grigo, Management Director Digital Assets of the Solaris Bank, and Moritz Schild, Chairman at Coinix and founder of the Hanseatic Blockchain Institute, and Berit Fuß, who already did the introduction. So yeah, now I can see pretty much everybody. Would be great if you would be able to unmute yourself when you speak. And I want to get right into the discussion with Moritz, because Moritz actually is a client or a potential client of custodial services. Moritz, when you look at digital assets custody, what are your most important requirements? Because we're talking now directly from the market. What are you looking for? What are the problems? And who solves it best and why?
Yeah, thank you, Sven, and good morning to everybody. Great pleasure to be here. So just a brief introduction for those who don't know me. Coinix is a listed entity, and we invest in crypto assets. We do quite a lot of early stage token investments, and we even invest into equity in existing blockchain startups. And when we started, essentially, we felt that's most appropriate to start with own custody, because we are holding our own tokens, so there's no requirement to do it externally. And when looking at the, first of all, diversity, when we started back in 2017, and we were investing in quite a significant portfolio of altcoins as well, and there was no one around from our perspective who at an acceptable price level would offer us to do the custody for the whole portfolio of our coins. And then with the portfolio growing, we started to look into potential providers, mainly to do custody for part of our portfolio, for the kind of deep in the seller part of the portfolio, which we would not need to move on a regular basis, because initially we felt with the providers more and more getting into the room, that usually it takes quite longer time to access coins that are with an external custody provider than having them on your hardware wallet 24 hours available. So your question about the main criteria to pick a provider. So first of all, it's security. We have to have a very good gut feeling and understanding that the risk of the provider losing our crypto is close to zero. This was one of the most relevant points when doing our initial due diligence on providers, and that's hard because most tend to be relatively open. However, when it really digs down to the details, who has access to which storage device and so on, then many custodians come to a point where they say this needs to be kept secret because it's a relevant secret for how we do it. And so we found it not too easy to do the full technical due diligence. That's the first aspect. Then the kind of user experience, accessibility, particularly the point if you are a small team, and when we started we were 3 people only, now we are growing as Toinix, then you have to have a clear kind of a predefined setup, who can do what and how can we replace someone who for whatever reason is not available, to be able in a situation as we had it this week to react quickly and to trade coins that you hold. And then of course it's about cost, and it's a little bit about reputation. So we are of course looking very much into who has the German crypto license, for example. And I have to admit, we are not yet clients of Riddle&Code, but we are very open to look into it. For the time being, we are using Coinbase as our custody provider, mainly for the pretty easy reason that they are so huge that everybody will understand that they are the market leader in this segment. And we tend to go with someone who has a huge credibility.
Talking about huge credibility, that is like a perfect step for me to address Uli. Uli, what is the Börse Stuttgart doing? How was your day yesterday, first of all? Did you cry? And did you have any outages? And what does Börse Stuttgart do to ensure that the custody side of things is working well, and how are you positioned on that side?
Yeah, thank you, Sven. Hi, everybody from my side. Straight to the point, right, Sven? So yesterday, actually, we had quite a day. I think not only we, but the whole crypto industry that provides trading infrastructure has been quite a busy day, has had quite a busy day yesterday. Same for us. We had no outages. We focus very much when it comes to the custody side, and this is what we heard before in the first talk as well. So you have to really find your sweet spot. What is ours? It's twofold. One is providing like perfect liquidity management for trading on several coins. And the other one is very high secure custody if you are, so to say, on the longer buy and hold scenario. And the way we set it up, I think we founded BlockNox, our custodian, in 2018, was pretty much driven by the need and the necessity to really understand how everything works in the cryptocurrency and blockchain world. And this is why we decided not to go to third parties like Coinbase or others. So the thing is that we really developed the step-by-step approach, and now obviously we are a German licensed crypto custodian, and we will be adding more and more services that are in the need for trading and custody partners. So adding more coins, adding different types of securities. We onboard institutional players at BlockNox, currently in the process of onboarding several banks in Germany. And yet, as I said, the main focus is to really provide perfect liquidity management on the trading side, which we focus on. And luckily yesterday, it was tough, but everything worked out. So all good.
Everything worked out in the trading sector.
Well, the trading is connected to it's a complete system, right? It's not only trading. I mean, we serve exchanges and we serve brokers, and here the usability is quite different. on the trading side, where you have a multilateral trading book, an order book, it's quite different than having individual brokerage parties. Like Moritz probably is on the buy and sell side directly. So you need to have a completely different liquidity management for companies like Moritz, and basically we serve those two worlds. So the exchange as we have it on our own, Börse Stuttgart Digital Exchange, and our Bison app where we serve Euwax as a brokerage company. Yeah.
Perfect. So moving to Julian, how did you kind of like live through yesterday? What did you see? What happened? And how did you actually tackle those challenges? And if I were a client and I could choose between the Blocknox custodian service and the Solaris Bank custody service, what would you pitch?
All right, so it's not that easy to answer the second question, since we are in a close partnership with Börse Stuttgart, especially Bison and BSDEX. So definitely not saying anything bad about our partner here. But of course, like, since I'm working for Solaris, I would definitely pitch our solution. But maybe let's start at the beginning. How did we come through the day yesterday? I think volatility is kind of a feature in the crypto markets, when we just like not talking about now custody and then security, but about the markets, the financials behind it. And this is why it is so interesting. Only through the volatility, I would say, we have a appreciation of the value of Bitcoin, for example, for like 10,000s of percentages over the last 10 years. And so I think it's quite okay to have these days. Of course, people lose money, but others make money. So it's a fair market, and so therefore I think it's very interesting. Maybe to zoom out a little bit, what are we doing as Solaris Bank in this ecosystem, and why I'm here invited to this panel, thanks to Sebastian. So Solaris Bank is a banking as a service provider. We are always in the background. We are white label, only working through APIs, and our claim is that every company can offer financial services to their clients. You don't have to be a bank, you don't have to be a payment service provider, but still you can offer this service to your end clients. And now when the custody license came in place, which was, I think, in the beginning of 2020, we thought as Solaris Bank, okay, now there's a tech product, a little bit similar to what we do in the banking side, only a little bit. We are all familiar with the difference, I think. And second, now there's also a license. So this is exactly how it is on the banking side. So why don't we also build an API for custody for our partners? Because our claim here is any company or every company should and can offer crypto services to everyone. Not by doing it everything on their own, just by partnering with us. That's the claim. And yeah, we are happy to drive crypto adoption in the German and European market together with all our competitors. And maybe one thing relating to what Philipp said at the beginning on the first session. Philipp said maybe he does not like this word of democratization of kind of custody, and I'm with you, Philipp, here on that. At the same time, I think we must look at digital assets and then custody as a whole new paradigm. And within this paradigm, there's place for a lot of different niches and players. And it's so interesting to see through the recent years, let's say 2 or 3 or max 4 years, the specification of use cases of providers. And yeah, I think that's what makes crypto markets so interesting. And I hope also this panel.
Well, yeah, thank you very much, Julian. I don't want to kind of like overlap the time, and I will be starting with Berit in the next kind of like setup that we do have. But now I want to hand over to the fireside chat with Chris and with Jacek. Chris is COO at Riddle&Code, and Jacek is the Senior Regulatory Affairs Advisor at CoinFirm. That's a coin tracking software, and we gotta hop off this kind of nice chat now again, and we got to see each other at 10:35 again.
Yes, hello. Thank you, Sven, for handing over. My name is Chris Hartmann. I'm the Chief Operating Officer of Riddle&Code, and we're going to touch a different area of crypto, which is DeFi, decentralized finance. and the regulatory, respectively, the AML aspects to it. To discuss the topic, I am happy to introduce Jacek Grysmiel. I hope I pronounced your name correctly. Jacek is a renowned expert in the field of AML for CoinFirm. Jacek, maybe you can shortly introduce yourself and explain to us what CoinFirm is actually doing.
Yes, thank you, Chris, for this introduction. It's a pleasure to be here. And as a partner of Riddle&Code, I would like to congratulate on the announcement regarding the approval in Austria. Yes, indeed, I am a senior advisor for regulatory affairs at CoinFirm and also responsible for business development in the DACH region. I'm really glad to see how the market is developing also from regulatory perspective in Germany in particular and in Switzerland. Having lived and graduated from Humboldt University, it's a real pleasure to see and work with many companies in Germany. So my background is legal compliance from UBS, Royal Bank of Scotland, Citibank, PwC, and now for more than 2 years at CoinFirm. CoinFirm is a leading AML provider for crypto assets. We have a platform, SaaS model and service for a variety of different crypto services, including custody, exchange, payment services, gateways, and also services from forensic perspective. So we're also involved in some major cases, including hacking attacks, or also working on a service basis with source of wealth, source of funds analysis. So we're experts in blockchain analysis. And as such, we're happy to support any types of protocols, blockchains, and do monitoring, filtering, and assessment of risk of various players, but also liquidity pools, just to set the bridge to DeFi as well.
Okay. Jacek, if you look at the financial industry, I have the impression that we are looking at the process of the industry forking into two different areas. One is the traditional financial system with that is based on intermediates to provide the financial services. On the other hand, we see what we now call DeFi, which are services that are based on ledger, a distributed ledger a technology. On public permission, there's blockchain in a trustless environment where we see financial services offered in a very similar way than we know from the traditional industry. I think what both of these areas have in common is the need to avoid illegal transaction, anti-money laundering, or even counter-terrorism financing. Now, can you explain in a nutshell, how does actually AML work in crypto?
Okay, of course. Speaking about it in a nutshell is a huge challenge. I could speak for hours about it. I think what could be very helpful, I think nobody shared any screens so far, but let me just back up my presentation with a few screens just to illustrate what the differences are in AML between crypto and fiat. So if I was to call out one single feature that is crucial when we're talking about AML transaction monitoring or tracing of assets in blockchain, it's transparency versus anonymity. On the one hand, blockchain is very often considered as being anonymous. Of course, this highly depends on the type of protocol. It is different with Bitcoin, Ethereum, or with anonymous types of coins like Monero. The key, however, the key opportunity of blockchain for financial institutions is that it's traceable. What does this mean? So I wanted to illustrate this with this example here. Typically, AML for fiat financial institutions is about monitoring certain transactional behaviors in order to identify risky ones. This can be fully covered with crypto as well. However, the additional possibility is tracing both for destination and source of funds. If we take the example presented here, drugs trade, we can see on the bottom of the slide It's not a direct exposure. It's the exposure of 4 hops. It's an exposure of only part of the funds. And even though it's 4 transactions distance, we can see where the funds were going to. It's a darknet marketplace. This is something that is not present in traditional finance, where you only are limited to the counterparty you're directly interacting with. Of course, there is correspondent banking as well. However, the limit is quite high in this respect. In blockchain, you can literally trace the assets limitless, and that's the huge benefit and the difference. Specifically for DeFi, Chris, would you like me to cover how this looks for DeFi as well, or?
Absolutely, it would be actually interesting. This is crypto in general, but I think DeFi has a few specific peculiarities and challenges. So what are actually, in your view, and from the view of a AML company, the biggest hurdles actually, or the biggest challenges that you meet in order to introduce end-to-end AML and counter-terrorist financing regime?
Yes. In the DeFi space, the main or key difference to centralized VASPs in general, not only exchanges, also liquidity pool providers, any type of service providers, is the fact that in centralized model, we have a central entity, typically a legal entity, more and more often also licensed entity and a registered entity, and also intermediaries between a buyer and seller. In decentralized exchange, as we all know, there is a buyer, seller, and only a smart contract, technology, a code between them. Everything is fully automated, and very often there is no central entity that could be taking the responsibility for, among others, also AML and KYC. What this means, what implications it has, there is a lack of global local regulations in this respect. So in March, we've seen a new FATF guidance proposal that is subject for comments. I will come to that in a second. Also, MiCA is starting to address this. And also we've seen in US, the first state that actually addressed this with a bill and is willing to basically regulate VASPs or regulate DeFi as VASPs, DAO, for example, yes. The difficulty, of course, is that DeFi by nature is cross-border and cross-jurisdictional. So what this means is how decentralized is really DeFi. There can be, to some extent, a centralized entity in between. Let's take AIF as example. And also who should be regulated. For example, according to FATF guidance, developers are not to be seen as VASPs. However, FATF already implies that if the new application or platform is engaged as business or is somebody that is using it for business purposes, can be considered as VASP. So this is very complex and complicated because the question is, who should be responsible, if at all anyone should be responsible. So let me skip, of course, there are certain things like data privacy as well, law enforcement implications. Of course, if you want to regulate VASPs, you need to have somebody responsible for SAR, suspicious activity reports. However, what we're facing as well, if as long as there is lack of AML solutions or regulation for DeFi, are examples like those here provided. Ether Delta, that was an unprecedented case of penalty, or that Ether Delta founders were forced to pay in US. Or KuCoin hack, where it's a known fact that KuCoin hackers were laundering the funds mostly through the centralized exchanges. So definitely there is a need, and what we might face without any solution for that will be effectively de-risking. We've seen already rumors from AIF, for example, to provide liquidity pool services only for institutional regulated entities, so that liquidity pools will be limited and reserved only for regulated players. Is that the way forward? So at CoinFirm, we are on the different opinion. And we implemented actually a solution to address that. Right, shall I continue?
Yes, please. I mean, Jacek, there's a lot of specificalities if it comes to DeFi, yeah, and a lot of challenges. And there's two different views. One is mainly driven by the institutional providers. They say, well, actually, we need a full regime of regulatory provisions. You already mentioned MiCA, which is marketing crypto assets, which is basically an initiative for European Union to have a single licensing regime across all European countries. Others say, well, actually, if you want to use the same regulatory frameworks and put it onto DeFi, you kill innovation, you kill the decentralized approach. At the end, I think we heard from the panel before, it's all about security, yeah? Because if the money is gone, then the question arises, who done it? Yeah? Somebody has to be responsible. So my question to you, do you believe actually that we see a trend towards applying the same regulatory regime that we know from the financial service onto DeFi or onto crypto?
Well, clearly we see some developments in this respect. As already mentioned, the FATF guidance implies that it's not a clear distinction between what can be considered as VASP and what not in the DeFi space. Clearly, setting different requirements in different jurisdictions would be another problem. As mentioned before, DeFi by its nature, is multi-jurisdictional. Even if we see some further developments in only specific jurisdictions, if we're talking about DeFi accessible to everyone, you would need to simply comply also with the additional requirements in those jurisdictions. If we have a situation similar to the one that we have currently with the travel rule, where in order to provide a scalable solution, you need to be interoperable and also adhere to regulations in other countries, then definitely this will be a huge barrier. An example of Switzerland with travel rule specifically. We have a jurisdiction that implemented travel rule. However, this is limited to one jurisdiction only. So if we want to regulate DeFi, this should be then global, cross-jurisdictional, and also possible to implement from technical perspective.
Mm-hmm. I mean, especially the aspect of inter-country and inter-jurisdictional regimes will be a hurdle, or could be a hurdle. So some come up with ideas more saying, actually, since DeFi is eventually relying on synthetic contracts, yeah, that are secured by cryptography and blockchain, isn't it all about the standardization of forensic methods to track services based on, for example, AML? Yeah. So there is a provocative question that arises to say, well, if I rely on the self-regulatory procedures within such a network, shouldn't we at least regulate the forensic companies like CoinFirm to have a standardized way and process to track transactions? Is that something that you're familiar with? Is that something that you can see in the future?
Well, this is definitely something that we would support. At the moment, basically in the last 5 years, since companies like CoinFirm started proposing solutions to the market, we've been in a constant discussion with regulators and also including directly FATF. This is a very new technology to everyone, especially with compliance. It's nothing new, right? So the criminals were always a little bit ahead of the regulations, and the regulators had always to catch up with different ways of laundering money. Now what they need to catch up with as well is new technology developments. Mm-hmm. In this situation, of course, there is a big responsibility of companies like CoinFirm to set proposals for standards, set different ways of approaching the difficulties that we face. And this is exactly what we are proposing right now for DeFi, and are consulting with the regulators. I would like to show you very quickly. So for the DeFi, what we propose is Oracle, which is an embedded solution into smart contracts that is automating, because basically what I showed before, the lack of legal entity enforces or requires an automated solution, at least to a large extent. So what we deployed is an oracle that we are discussing also with the regulators as well as protocol issuers. Most recently, we implemented this on RSK stock. So the first and second level of AML, first being automated, fully embedded into the DeFi operations. And the second, of course, in addition to that, being the possibility of evaluating addresses once high risk has been triggered. At the same time, transactions can be blocked automatically if they are related, for example, to sanctions. I think everyone would agree, DeFi, whether it should be regulated and to what extent, it should not allow access to sanctioned entities or terrorism, for example. So, yeah.
Well, thank you, Jacek, for these really interesting insights from an expert of AML. I think we ran out of time now, and we were all excited to see what the future will bring and where the industry is heading. I will hand over to Sven again. He will moderate the second part of custody digital asset custody, and he will take a look at the operational view and the status quo of custody. Sven, your stage. By the way, you really look like a Formula One moderator, so we expect a speedy discussion.
All right, I'll just speed up my talking like 8 times or so. Thank you very much, Chris. I really like to start with Berit this time, the girl in the round, because she is trying to go to financial institutions and to sell the Riddle&Code infrastructure. And being a consultant myself, I did see, or I do see, a tremendous, it's like a fundamental shift of the talks that I'm having, and I kind of want to stretch that to Berit as well. Berit, did the conversations with traditional finance, did they change, and how did they change in the last couple of months or years?
Thanks, Sven. I think there's a lot of things to say there, and in general, I think there's a couple of things that have changed in the market in general that, of course, changes the dynamics of the discussions that we're having. First of all, I think that there is a lot more attention to, but also understanding of the importance, but also the complexity of custody when it comes to crypto and digital assets. So that kind of already changes our conversation because it changes expectations and the type of questions that you're getting and the type of problems you're asked to solve. Besides that, we've also seen in the past, let's say 2 years, a lot more attention, but also action on the regulatory front. Again, that changes the discussion, and it also changes the type of companies that we're talking to, because more and more is literally allowed, and more types of financial institutions are interested in entering this space. So that also really changes the dynamics for us. And then finally, with a lot of these new products, protocols, and opportunities arising, DeFi just being one of them, I think it's becoming more and more of an ecosystem. It's not just one product, one service, and that needs secure custody underneath, but there are a lot of different players in the industry that need to connect to each other, and we also see that in terms of the type of questions that we're getting. And now if I'm looking at the financial institutions that we're talking to, so as you know, we both work with more traditional financial institutions as well as with crypto service providers. And one of the things that really changed the conversation is the fact that institutional investors are entering the market. By no means all of them are entering the market yet. I think that there is still a wave to come. But the fact that this interest has been piqued changes the requirements. And it also changes the requirements of some of our customers who are crypto exchanges and want to offer services to institutional investors. It also changes the fact that we have conversations with them directly, and they need to run their processes and services in a very specific way, and they need solutions that help them do that. So for us, offering products and services to these customers has always been a balance between security, I mean, never compromising security, but also making operational processes easier and better controlled. And then finally, let's say other financial institutions such as banks and stock exchanges are kind of getting into the action as well. I think there's a small part of these institutions who are interested in crypto and providing crypto services. At the moment, I would say there's even a smaller part of them who are interested in tokenization of digital financial assets. But I do really think that this is a growing area. And for me, actually, the conversations are very interesting because I don't start the conversation with, hey, we need a custody solution. I start the conversation with, hey, we want to create a digital asset. And only then they also need a custody solution. So there's a lot of things that we have to pay attention to. There's a lot of expectations that have grown and really try to create a product that is standard by all means and easy to use, but that can cater to, let's say, the challenges of a large variety of customers.
Perfect. Thanks for that. I kind of want to move on to Uli and kind of like test the waters if he sees the same kind of like the shift from a lot of talking to actually doing something. And I want him to share the most awkward moment that he had with a traditional financial institution. I will pass this on to Julian as well, so he can think about that a little longer than Uli can.
That's not fair.
You can manage.
Well, let me put it that way. So I think from the operational perspective, I think we've learned quite substantially a lot over the last years in the complete industry, and I don't really mean that only with regards to our own custody solution. I think the requirements that are being set by the industry have tremendously changed since institutional players like banks, traditional banks, or other financial institutions are aiming to enter that market. So I think custody, when it comes to the combination of operability and security, is really something that well needed to be improved quite substantially. And also we did quite some learning curve and some awkward moments from talks with customers. Well, I honestly, it's really tough to give examples here. It's more, I wouldn't really call this awkward. I think it's just a lack of connection to the crypto space itself. So financial institutions on the classical side tend to think of how things work, how they have been working the past 30 years. And now having a decentralized system with completely different parties interacting there give you the opportunity to really do things differently. What they want to have is the things need to work exactly like they worked in the past 30 years, and you need to make them understand, look, yes, we can do it that way, but we could also do it differently. And then you have obviously a lot of discussions, particularly then when it comes to areas like legal and compliance, because technically a lot of different things are possible. On the legals and compliance side, financial institutions are bound to the rules and regulation that they are, and they're not really flexible. We heard that in the talk with, or in the questions that Philipp was raising. So what are the regulators, how are they improving the system? In Germany, we were somehow behind now. We just passed a new law for electronic stocks and, sorry, not stocks, for electronic digital assets. So I think that's actually the most critical part when it comes to the awkward situations, to talk to the clients and say, look, we can do it differently, but they don't really want to have it differently. They just, I want to do crypto in my old-fashioned way. And that's when it's hard to become creative to bring those two worlds together.
Julian,
Sven, I don't know if I'm allowed to jump in on this, but you know, I completely agree, and I think so. I have a background in banking. I come from that area, and I really recognize this as a dynamic as well. And what for me the interesting thing there is that these conversations kind of have to go back to the underlying, you know, risks and challenges that we want to prevent or mitigate or you know, at least monitor and control in such a way that it allows us really to redesign how the solution works, but not necessarily redesign what the solution should enable or prevent. And for me, that's really interesting to do, because I was in that world for quite a few years, and that was the way I had to work as well. And yeah, now you have that opportunity to try and change that around, but obviously that is very much a joint process that you know, that we also go through with these institutions.
Well, that was very...
I think if I step in, sorry.
Sorry. Now, well, it's just like, because I had such a wonderful time to think about two anecdotes. I have two now for you. The one is like old bank is thinking about crypto. The one is putting Bitcoin into ISIN, like International Security Identification Number, or German WKN. That's the one thing, and just like not to change anything in the front end. And the second is stop trading during the weekends because we cannot settle. So these things are really kind of showing how like traditional mindsets can somehow misuse the potential of this new technology, and that's exactly what I mean with the new paradigm. And then there's something in between. Let's say you want to enable crypto trading during the weekends, like as everyone does and should do, then you still have some other problems, because how do you settle fiat 24/7 all on the weekends, on bank holidays, in the night to Sunday 2 a.m. How do you do that? So this brings another set of problems. Now a little bit far away from custody now, but talking about making use of crypto, making use of custody, you also have to think about this fiat to crypto gateway, and this is why we on our side use our capabilities as a bank to also do this brokerage business. And yeah, I think these two anecdotes, together with the settlement problem on the weekends, why there are, for example, in the last couple of month on the weekend, there were quite some troughs over the weekend in Ether and Bitcoin trading. This was mainly due to the lack of settlement, of fiat settlement side of the crypto trades, which is very interesting, I think. And there we can again see that this whole infrastructure of the market has to be transformed, and there will be an overlap, right? And it will not be kind of today we have securities, tomorrow there will be digital assets. No, there will be a long overlap, and during this overlap, that the market infrastructure will evolve more into this decentralized 24/7 trading. And I think it's so interesting to be part of that and drive this change.
Moritz, you wanted to jump in. Go ahead.
I just wanted to quickly elaborate on what Berit said, because if you look into the EWPG, the new draft for a law on digital securities, then it gives you a clear view that even the regulator has not yet digged into the system. So they require that each and every digital asset needs to have an issuer, which in a decentralized world, there is not necessarily an issuer of a digital security, like the Bitcoin and others. And secondly, there's always this old school requirement of setting up a prospectus. And if you understand that everything is digital, and it's much more relevant to look directly into the smart contract instead of having a lawyer describing what is likely to be part of the smart contract, then it really very much shows you that the new processes that are possible will not be regulated within the next 5 years in an adequate and appropriate way.
That's a very interesting, and I kind of want to nag on this a little bit, because you, Moritz, touched upon I think, very, very, very interesting topic by bringing the smart contracts into play. because and that also kind of like shifts our conversation a little bit now into the Q&A that will be following up afterwards, because we are talking also about the decentralized finance stuff. And why does decentralized finance stuff work? It works because of the smart contracts. So if you were to custody a digital asset or digital security, and I think I want to go with Julian on this question, and then Uli has a little bit more time to answer that, and I will finish off with Barrett at this one. So if you are keeping custody of, let's say, a digital asset that is a token representing, let's say, a house, a physical house, and you have an ERC20 token standard that is custodied within your solution, do you look in the smart contract at all, Julian?
Yeah, I mean, the smart contract is very crucial to be vetted, because there can, for example, be a burning or minting a mechanism built into that by the issuer, by the technical issuer and deployer of this smart contract. And if you do, for example, custody of this, and as a regulated entity and kind of safe keep values, for example, in your example, the house, and this can just be burned, then you have a problem. So as a custodian looking into the smart contract, just as in pure DeFi, where we could see like the DAO hack and things like in DeFi at the beginning of year in finance, there was a hack in late summer 2020. Vetting the smart contract is very, very crucial, especially if you're a regulated custodian and there's real values and there are people trusting you with their values they store with you. So definitely a big thing. And this is also, I think, now like combining kind of DeFi on the one hand, which is kind of this new evolving, very, very vibrant ecosystem, which is really only like very, very lightly regulated, if at all, maybe supervised by coin firm and Chainalysis and so on, but not really regulated. And on the other side, you have now real assets, real world assets that are regulated when you have a smart contract kind of tokenization of real estate, and there's usually a security behind that, a contract behind it that applies to German law or European law whatsoever. And like combining these worlds, I think there is like we are not seeing that now, and we will only see that in a few years, because this is, again, it comes down to this ecosystem development from law firms who have to be experts on that, from a regulation that has to be adjusted to it, and all this. And when this grows together, then we can see maybe tokenizing my plane, putting it into Aave and lend USDC against it. That would be very, very interesting, but we are not there yet.
Yeah. Sven, is it me next? Well, obviously I can just quickly answer. Yes, you have to look into it just from the blame perspective, that from a regulatory perspective, you have to make sure that the tokens that you are actually taking into custody, you are allowed to take them into custody and do exactly that with the license that you are provided by the regulator. So apparently safeguarding ERC20 tokens, technically it's not an issue at all for probably most of the companies out there, but having the appropriate license to safeguard and have custody for security tokens, at least in Germany, or well, is some kind of an issue, as you probably will not be able to do that with the crypto custodian license. So you need to have a thorough analysis on whether you can really do that also from a regulatory perspective. Same with your car. Probably most of our cars go more than 50 kilometers per hour. However, in the city, you're not allowed to go faster. So same thing.
Berit, do you have smart contract auditors sitting at Riddle&Code?
I don't have any in my team at this point in time, no, but you know, I do think that let's say a couple of things are very important for us. So I think the first thing that's important to understand is that we're a provider of self-custody technology, right? So our customers are usually the companies that hold the licenses, the financial licenses around the assets. So that is one thing that doesn't hit us directly, but of course it's something we work on together with our customers. But you know, from the perspective of a technical custody solution, I think a couple of things are important. So first of all, first thing has to do with the token design, and I think this is also what Julian hinted at, understanding how a token behaves, who has access to a token, and kind of figuring out if these behaviors are restrictions. It can be a restriction to trade a certain token for a certain amount of time. If that is solved by the smart contract, or if there is something that you would want to or need to solve within the custody part of the solution as well. So that is definitely something to look at. This becomes especially relevant for us when we do both, let's say, the tokenization project as well as providing the custody solution. Then things obviously become infinitely easier. I think a second part that's important to take into account, it's less directly related to custody, but it has to do with, for example, with counterparties in decentralized finance. This is also why, we wanted to invite CoinFirm here today, where, with a crypto transaction, it might be a little bit easier to identify the counterparty and fulfill your duties when it comes to anti-money laundering and monitoring of transactions. When you participate in DeFi products or participate in liquidity pools, that is slightly more difficult to do, and then I think that's an understatement. But it's definitely something to take into account, and for us, very important to make sure that we integrate with service providers who can actually tackle these issues, because we work with regulated entities. And then the final thing that for us is the most interesting, of course, is that if these tokens relate to real world assets, whether that is a house or a car or a machine or whatever, I think this is really at the area where Riddle&Code plays and wants to play a significant role, kind of going back to the chat with Alex and Tom at the beginning, where, we give identities, secure identities to objects and machines to make sure that there is, let's say, a very strong link between a digital asset and the real world as well. And I think this is very important to, ensure that digital assets have a value, that value can be verified, that it still exists, that the car hasn't been, totaled, or, anything that would have an impact on the value of a digital asset. So establishing a very strong link there, especially going forward, where you will see more tokenization of say non-financial assets or indirectly financial assets. This will play a huge role, and this is definitely what we're focusing on with Riddle&Code to solve.
Perfect, thank you for that. And now I kind of want to open up for the Q&A session. So we ran like 5 minutes over the time, but I wanted to give the opportunity to everybody to kind of get into the game. So if all of the other participants would just kind of share their videos and unmute themselves, so we can dig right into that. I actually have written down the questions that came in, but I kind of want to start with the last one, because I think that's an interesting one, because it was asked what would the international ecosystem need to continue to make this happen more for other assets, and it was referred to the purchase of the St. Regis in Aspen, which was purchased through crypto and blockchain assets. So what would we need on an international scale? What do you guys think, and who wants to tackle that? This is going to be challenging because there's so many people now in the call. If nobody steps in, I'm pointing one out.
Yeah, so I can try to just give you one example. With the German custody license, we are able to actively market this product and the custody to the German market. We will not be able to do that across Europe to end customers. We may be, again, able to do that to businesses. And then there you have this kind of reverse solicitation. If they find you, then you can work with them, but you cannot actively market it in for example, Spain. This is just like one tiny thing on what challenges there will be. Then what Uli said, you can only, it's kind of like having a fast car, but you are still within a city, and then you can still only drive 50 kilometers per hour. It is, we are capable of doing that, but there are a lot of legal limitations to this. And then you have this, I don't know the English expression for that, but Grundbucheintrag, where for example, the ownership of for example, a house is written down. And if you just kind of send the token somewhere, will this also automatically be changed there? Not yet. So you may have to change this as well. And these are just like 3 things that pop out of my head. There are potentially 15 more. And I would say most of them are probably on the regulatory and legal side. Yeah, that's my first take on that. Anyone wants to add here?
I think one of the relevant issues is really that the nations still try to find a national regulation for the crypto market, and this is not appropriate for kind of the scale it has. And I think so I appreciate what on EU level is kind of slowly developing, but ultimately there needs to be a rule saying, if someone wants to promote crypto investments, the following criteria has to be fulfilled on an international scale. So e.g. the underlying smart contracts need to be made available, and it has to be an address somewhere. And as soon as you start saying, yeah, you need to have a Niederlegungsstelle or a representative in Germany, then it gets again into this kind of small-minded Scheuklappen view, which will result in so many difficulties in rolling out something on a global scale. And one additional remark from my point of view, I think as long as there is no regulation, then there's so much potential for self-regulation. And what we have seen with many exchanges somewhere in the world, there are quite a few players that want to be the white sheep in this market, and they proactively define certain rules and standards, even though there's no regulator requiring that. And I think that should be an approach for all people that want to have this market grow, to cooperate on a multilateral and international level to define kind of self-setting standards.
I think you touch a very good point here, Moritz. Yeah, well, and I mean, we've not talked about this before, but actually, when Germany and the German regulator actually introduced the cryptocurrency license, the whole crypto and blockchain world just went crazy and said, well, this is all nuts and this is all not good, and so on and so forth. But actually, and I kind of stood there with a little candle and saying, hey, this might be even good, and everybody was kind of like bashing me and saying, no, this is not good for the industry. But what actually happens is it's very easy. It won't go unregulated. That's a full stop thing. It won't go unregulated, and everybody who wants to be regulated and is going into the German market can be pretty sure that the German license, in the process of turning from the German license to the European approach, will be passportable. And I think that's something that all the German players are playing on, which is a great field, I'd say. But now, and in contrast to that, and that's the reason why I kind of wanted to push it in that direction. Ray said, like very early on in the conversation, cryptocurrency was created to remove or bypass the middleman altogether. Why would we want to take a step backwards by pushing crypto back towards centralized custodians and financial institutions? So free the world versus financial institutions. I can't think of anyone better answering that than Uli. Go for it.
When I started with what we did here at Börse Stuttgart on the digital agenda in 2017, I went to a lot of blockchain conferences, and everyone was asking me, so what's your biggest pain point with Bitcoin, and what's your biggest pain point with crypto? and mainly with Bitcoin. And then everybody was hinting to some technical issues on the scalability of the system. And they were all pretty surprised when I told them, I think the biggest issue that I have with Bitcoin is that nobody really cares about it. And then everybody was shocked, like, oh, what are you saying? It's so awesome. And I was telling, yeah, it is awesome. I also think it's awesome, but honestly, it's a very, very small fraction of our population that even understands and knows what it is. So if you really want to change that, you need to make it mass marketable. And if you want to make it mass marketable, you need to have a lot of that, which is creating the complexity of the system, take it away and have intermediaries taking over parts of that. Be careful. I'm not saying taking away the keys of the people, but eliminating the complexity on a lot of these points that people can access and have access to this type of assets, and then educate them on how they can use it and extract them on their own, for instance, with companies like Riddle&Code. And regulation, I would stand there with my candle next to you, and I was always standing there next to you, saying, hey, this really helps us because it brings the whole thing to a completely new system. Look at all the financial institutions that are now interested to provide this to their clients, to their B2C, B2B clients. So everybody's talking about Bitcoin and crypto now. So I think regulation did quite some good in that perspective. Yeah, but obviously now I also think that particularly when it comes to Bitcoin, the success of Bitcoin is probably also the biggest problem. As soon as Bitcoin becomes to a stable kind of currency like global payment method, then I think the national sovereignty of countries will be questioned. And I think at least then we will have some discussions on how Bitcoin and other cryptocurrencies have to be regulated. And I'm a little afraid of that.
Oh, that's an interesting point. I start getting more and more afraid too, but let's see how this pans out. I want to get over to Chris, because I have a feeling that Chris is kind of like more on the let's decentralize things side of the world, and not too much on this, yeah, let's regulate everything. There was a question that somebody posted in the chat where he said that the traditional industry is destined more to be a participant rather than sitting in the driver's seat. How would you say that, or how do you feel about that?
I think I'm a strong advocate of regulation, but in the wider scheme. Meaning, I'm not talking exactly to take the same regulatory provisions and put it onto crypto, but I'm saying it will need rules that we can rely on. Yeah. And whether these rules are presented and secured by synthetic contracts, smart contracts, as Julian pointed out, is another question. And to what extent can I actually trust these contracts? Yeah, I think technology will help to secure these contracts, but on the other hand, it doesn't solve one problem. Yeah, in a fully decentralized world where everybody is his own custodian, manage his own coins. Yeah. There will still be illegal transaction in terms of money laundering. Yeah, so like a shady money in and take it into different channels. This is something that has nothing to do whether it's decentralized or centralized. It's just how do you actually prevent it? And I'm very much convinced that especially for this aspect of the industry, we will need, again, rules, procedures, and even across countries and legislations.
Anybody wants to add to that? Maybe Berit?
Yeah, I mean, if it's about, you know, participant or in the driver's seat, I think it's a little bit of a black and white way to put things. I think we have different industries and different companies, and you know, everyone is operating in their industry and in their niche. And I think for crypto, that will be the same. I think that yes, decentralization is bringing a lot in terms of access, participation, security also sometimes if implemented correctly. However, it's also a mere fact that sometimes a central party with a lot of resources can create and bring about an innovation really quickly. And the question is a bit, do we want to completely prevent that, or do we want to allow that, make use of these innovations, but without making that inaccessible to others to innovate as well? And I think one of the things, this kind of also going back to one of the previous questions, that I find quite interesting is, so if we want to tokenize more assets, real world assets, financial assets, I really don't care. One of the things that I think are still needed a lot more are marketplaces. Right now, marketplaces are sometimes restricted to a certain country. Some marketplaces feel that they have a very high cost to add and list assets. But ultimately, just because you digitize an asset or tokenize an asset doesn't suddenly make it a lot more valuable. And it's maybe a bit odd to say in the light of the prices some NFTs have been sold for in the recent months. But in principle, just tokenizing an asset doesn't make it more valuable. You need to make sure that there's a market for the asset. You probably want to have a marketplace that allows a broader access also to that asset than it would have, if it was just a physical asset. So I think these are things that still need to be solved. And we all know that the marketplaces in this world that are successful are the ones that have a certain level of economies of scale. So there is always some advantage to centralizing knowledge or expertise or bringing together a big group of buyers and sellers. And that doesn't mean that the technical infrastructure underneath it cannot be decentralized. Don't get me wrong, but ultimately bringing together parties around an asset is what makes it more valuable. And then finally, also pointing towards Coin Firm a bit, some processes are very difficult, right? In figuring out whether transactions are shady, whether counterparties are, on blacklists. So this is a type of centralization of knowledge. And I think that makes sense because not every single person or every single company in this world can build up the expertise to do that type of analytics. So let's find, a road in the middle that, let's say, gives way to the ideals that is behind cryptocurrencies, which is a global market, an accessible market for everyone. But let's not, just create a complete wild west where there is no consumer protection, where there is no way to figure out if anything's happening on those networks that together we don't want. So for me, that's a balance that somehow we need to find to solve together.
All right, perfect. I think looking at the time, I give room to kind of like one more closing statement before thanking everybody for participating. Is there anybody who wants to add on that?
Yeah, I have one idea when it comes to this intermediation and trust. So let's say we have this perfect trustless ecosystem that's settling funds all over the globe. Everybody can interact with that. Still, you need to somehow educate society on that. So somehow the gateway into this ecosystem must be trusted, either because you understand the technology behind it, or if not, you trust someone being the bridge into this ecosystem. And of course, like everyone should have its Ledger Nano or maybe Riddle&Code device or whatsoever, right? But that would be a perfect world. But we are not living in a perfect world. There have been many experiments in the past where it was shown that maybe a superior system does not work because people are not used to it and people cannot interact with that without any education on that. And therefore, I think there is definitely place for some intermediaries. And at the same time, some who are educated enough do it on their own. And that's exactly, and I repeat myself now the second time here, that's the new paradigm that society has to get used to, and leaving room for many different services, very specialized entities, institutions, and so on. So that's my closing remark. Thanks, Sven.
Well, but I think that hits it pretty good because how do we close? There is a place for very, very many different business models in here, and I think everybody in this call is interested in doing business in the blockchain sphere. Everybody in this call thinks that this, or I don't know everybody who is listening, but I think that everybody from the speakers is convinced that blockchain will be the next big thing, or maybe even is already. We are all looking very much forward to be talking to the regulators. I think it's very great to see more and more regulators actually kind of like coming into these calls and talking to us. So this is great. And now there's, I think, nothing more to add than thank you for everybody participating. Thank you for the questions. And if there's any question that I have left out, please always make sure to kind of like come back to me on LinkedIn or hit the speakers directly. I'm sure that they will be happy to answer any questions you guys might have.
So thank you. Thanks to you, Sven, for the excellent moderation. I just made it back in time. We will continue with this webinar series end of June. We will keep you announced about the dates, and then it will be on industrial tokenization. We touched on this, of course, already today, but there's a lot more to talk about. So thanks to everybody and the very insightful session we had this morning. Bye.